There's an interesting trend brewing if you've been following the median home price locally or in the overall U.S. housing market. In fact, this trend has apparently confused our local newspaper, the Tallahassee Democrat, and its parent company, the USA Today Network, which ignorantly warned of falling home prices. They say that ignorance is bliss, so I'm guessing the USA Today Network is very happy right now. Though I do not believe there was a malicious intent to deceive its readers, I'm very confident that their poor journalistic effort did indeed lead many readers to believe that the housing market conditions were different than what consumers are facing today. In order to set things straight, I've produced this video to explain what's really going on in the housing market and how automated reporting is distorting the reality of our current housing market crisis. And unlike the USA Today, I use data from multiple sources with validation processes to reveal accurate housing market conditions. Today, we'll examine the median home price, the median home value, and some interesting results in the new construction premium that buyers are paying now versus what they've paid in the past. From these important results, we'll be able to accurately forecast the near-term future of U.S. home prices. Stick with me through the end of this video, and I'll show you how it's possible for the median home price to drop, all the while homes are getting more expensive than ever. Ultimately, you'll have a better understanding how ignorant reporters can come to faulty conclusions which lead consumers to incorrect expectations. And in case you're thinking that home prices are truly falling, I've included a link below to the active listings price near today's median home price. Note how many of them are already under contract with buyers. This high level of demand is more than just anecdotal evidence that the price of homes are rising. Though some of today's report uses data from the Tallahassee real estate market, I can tell you that it is highly likely that this will reflect what's going on in the majority of U.S. markets too. I continue reading and hearing from agents around the country about their markets, and from coast to coast, real estate agents are reporting historic low inventories and soaring home values. I have been advising for years that home affordability will become the most important topic related to the economy and to the real estate market. Low inventories in both the for sale and the for rent markets have both prices and rents soaring. I often explain to our viewers from outside of Tallahassee that Tallahassee housing market is a fair bellwether for the overall U.S. housing market. By way of proof, let's compare the median home price in Tallahassee with that of the overall U.S. housing market for the past 31 years. I've mentioned Tallahassee as a bellwether for the U.S. housing market before, and many of my longtime viewers have shared that our reports help them in their local markets. So, if you're not a subscriber, please consider clicking the thumbs up like button and subscribing now so that you get all our new content when it is fresh. Like our other subscribers, you will appreciate the reporting of facts, not hype, and you'll get to know what's going on in the housing market despite all the fake news available online. Over the past 31 years, the median home price in the U.S. has risen 4.19% annually, while the median price of homes in Tallahassee over the same period has risen 4.26% annually. Tallahassee usually has a bit of a lag in the results when compared to the U.S. For example, the median U.S. home price peaked in 2006, whereas the median home price in Tallahassee peaked a little later in 2007. Overall, the median home price in the U.S. fell further than did the median home price in Tallahassee, and I believe that is why we've seen the bounce back from the bottom to be stronger in the U.S. overall at 6.2% than in Tallahassee at 4.75%. Whether you're in Tallahassee and you're viewing my U.S. reports or you're elsewhere taking in my Tallahassee housing reports, you should know that the information will parallel each other with localized adjustments for prices and values for nearly all U.S. housing markets. In other words, pay attention to the trends, not just the absolute values beneath those trends. When reporting on single-family homes, most real estate reports, including those from USA Today, combine the sales of single-family detached homes, townhomes, and condominiums. But these three property types are significantly different, so we're going to dig a little deeper to uncover how each home type is performing. The first set of graphs segments the market by property type, while the second set separates new homes from existing ones. This graph examines the median home price, segmented by property type. What it reveals is that the median single-family detached home price is moving higher at a faster rate than is the median single-family attached home price. Detached homes are plotted in red, while attached homes are plotted in blue, a solid line for townhomes and a dashed line for condominiums. The median home price for single-family detached homes continues to set new all-time highs, leaving the past high years well behind it. Townhomes have also reached new all-time highs, but that is not the case for condominiums. The median condominium price continues to struggle due to the oversupply of high-rise units downtown. Here's how the median home price has changed in Tallahassee since the previous market peaks in 06 and 07, and you'll likely find similar results in any local U.S. housing market too. Single-family detached home prices are up 38% since 2007. Townhome prices are up 8% since 2006, and condominium prices are down 13% since 2006. While only the detached homes have exploded higher thus far, you can expect the rest to follow suit as detached inventories shrink. Low mortgage interest rates had enabled buyers to increase the amount they paid for homes without increasing their monthly mortgage payments. This fuel for the market has been thinning out as interest rates have already moved more than 2% higher in 2022, a change of nearly 65%. The relative supply of homes for sale continues near an all-time low, allowing sellers to demand more money for their homes. How prices move this year, I believe, is set in stone. Higher. The rate at which they move will be impacted by the pace at which mortgage interest rates rise, though the huge jump earlier this year has not slowed down value growth at all. Much like the median home price, the median home value is moving higher rapidly for two of the three property types. Single-family detached homes and townhomes are finding new highs, while condominium units are still struggling. Here's how the median home value has changed since the previous market peak in 06. Single-family detached homes are up 31% since 2006, townhomes are up 9% since 2006, and condominiums are down 12% since 2006. The market has always favored detached homes, but the disparity in the recovery values, I believe, relates to the type of buyers in the market. Back in 06, there was an unhealthy percentage of inorganic buyers, people who were not buying to use the property, rather they were speculating on flipping homes for profit. Plenty of buildings were converted to condominiums, and the speculators found great returns until the market was glutted with supply and values started falling. This is clear in the graph. Due to the unattainability of detached homes today, townhomes have started moving higher, while the road to recovery for condominiums is much bumpier. In Tallahassee, the downtown condominium market still has a glut of supply, and now 15 plus years after their birth, there's not been a strong sign from the market that there's significant demand for this product. I do expect to see a shift in the market, however. As single-family detached homes become unaffordable for many buyers, they will be pushed towards the attached home market. This increased demand will accelerate the value growth of both condominiums and townhomes. This graph tracks the median home size by property type. I always like to include size graphs whenever we study prices and values. A change in the median home size is usually the difference between what buyers are spending and what sellers are getting. This is a very important point, and I believe that it's the reason why automated reporting, such as what the USA Today network has done, can deliver faulty conclusions. What they fail to realize is not only do median prices and median values change, but what constitutes a median home changes too, because it's common for prices and values to move at different paces. For example, now that mortgage interest rates are moving higher fairly rapidly, it's going to create some sticker shock and home affordability issues among buyers. This means that the amount of money many buyers can spend will flatten or fall. But at the same time, inventory is near record lows. Builders are not producing at historically normal rates, so the supply of homes for sale will still be too low for even a lowered rate of demand. Homes will still be appreciating in value, all the while buyers will be unable to spend more money. When the year is over, I expect home prices will have moved higher, but home values will have moved higher at a much faster rate. This suggests that we'll see the median home size decline by year's end. Home sizes have not yet fallen due to the lower mortgage interest rates buyers enjoyed in the first quarter of the year, but you can bank on them falling because rates are now much higher. Over the long haul, prices and values typically move along similar growth lines, just with variances along the way. But during the short term, like what we're seeing in 2022, it's very helpful to see how prices and values vary and then use the current trends to forecast the near future. This is why an ignorant report in a national newspaper based upon one isolated statistic can be damaging to so many people. With the strength of available low mortgage interest rate loans, buyers had been spending more money buying bigger homes than they could if interest rates were higher. Now that rates have moved higher, we can expect to see the median home size get smaller. This is a normal fluctuation in the market, and it is why we use values, not prices, to inform consumers about the affordability of homes in the market today. The first portion of our report focused on property type, but the next three graphs segment the market between new construction and existing homes. The automated reporting, such as what we saw with the USA Today network, does not account for the influence of new construction in the market. New homes are typically more expensive than used homes, so a surge in new construction can make the median move higher, while the opposite can significantly slow the apparent growth. This critical view of the housing formations makes it clear why we are seeing such extreme market conditions today. This graph shows the median home price of new homes in blue, existing homes in red, and then the overall median home price in gray. Through nearly 5 full months in 2022, we find that the median new home price has moved nearly 27% higher than last year's median. This is ample proof that the supply chain issues developed during COVID have rocked new home construction. From 2013 through 2021, the median new home price grew by less than 13% total for an annual growth rate of 1.5%. But the median new home price has shot up 27% in just 5 months, which is perhaps the most disturbing trend we'll uncover in today's report. Can you see why home affordability is so threatened today? So how would this impact the resale market? Existing homes saw the median home price move 51% higher from 13 through 2021, which is an annual growth rate of more than 5.3%. But resale prices are up just over 1% since last year, and this is something that has confused ignorant reporters of the USA Today network. We have to remember that the change in the median or average home price reflects more about what buyers are spending than it does what sellers are getting. Mortgage interest rates have shot up. Home affordability has declined, so the amount that buyers can spend is under great pressure. But does that mean home prices are not going in value very fast right now? This graph reports the median home value of new homes in blue, existing homes in red, and then the overall median home value in gray. I believe the best measurement for real estate appreciation in a market with sufficient sales is the movement of the median existing home value over time. In 2021, existing homes appreciated at 11.4%, which is more than 3 times the average we saw in the 1990s. This is alarming, as it is toxic to home affordability. Note that the builders had been holding their costs fairly steady until 2020, but the issues we've been warning about seem to have new construction costs soaring. While some of these soaring costs are directly COVID-related and will soften, others are not. I'll be curious to see how the 75% plus increase in the minimum wage that Florida is undergoing does to the cost of new homes and how that impacts the production of the homes our market so badly needs. I'm not optimistic. Even though the median home price has only ticked slightly higher, the median home value has risen more than a full percentage point each month already in 2022. The median new home value is up 9.3%, while the median existing home value has pushed 6.6% higher. This is why we track values separate from prices, because prices do not always reflect appreciation in the housing market. The USA Today network's headlines would have been very different had they consulted an expert. Instead of misleading headlines reporting that the median home price has fallen, implying that homes are getting cheaper, they should have reported that home values are soaring at more than 1% each month, nearly 4 times the historical rate of change. Even with the recent surge in the cost of new construction, the premium that a buyer pays for a new home is falling closer to what a buyer would pay for the same size existing home. This graph plots the median new home cost in red and the median existing home value in blue, with each measured in price per square foot for the past 30 years. We measure the trend of the difference of the two in gray, highlighted in yellow, and plot this percentage on the right vertical axis. This gray line is something we refer to as the new construction premium. It's that extra percent that new home buyers are paying to get a brand new home. During the 1990s, lots were fairly cheap, and so too were the sticks, bricks, and labor it took to bring a new home to the market. Thus, the median new home cost, on average, just 5% more than the existing home values, though it was not uncommon to see this jump above 10% for small periods of time. It is clear how things have changed over the past 20 years. As the market began to collapse in 2006, we saw the new construction premium rise. By 2011, it had pushed higher than 40% and continued even higher to more than 55% in 2014. When the market finally balanced in 2016, we saw the premium sitting near 45%, meaning the median new home cost 45% more dollars per square foot than did the median existing home. The huge difference between new and used home values left builders in a cautious state, and the market began to move into a depleted inventory state, causing existing home values to move higher at a faster rate. Since that time, with builders producing fewer homes than the market demanded, we've seen the premium drop to 20%. Right now, with the market containing far too few homes for today's heightened rate of demand, soaring new construction costs have created extra inflationary pressure on existing home values. This has been a major punch in the gut to home affordability in 2022. Unlike what we saw in 2006 when cooling demand commenced in an oversupplied market, the cooling demand this year has begun with an undersupplied market. This means we're not seeing prices soften with falling demand, as even the lower rate of demand far exceeds the current supply of homes for sale. This graph reports the median home size of new homes in blue, existing homes in red, and then the overall median home size in gray. When I look at this graph, I immediately see how builders, the blue bars, respond to changing market conditions. When the market was at its peak in 2006, the median home size was at its smallest. Following the market bottom in 2012, the homes in 2013 were the largest. Today we're seeing a new homes getting larger, which has me scratching my head. Perhaps it's related to the low mortgage interest rates that were available when they permitted the current crop of new construction homes. Typically, when builders are struggling, they deliver more square feet for the money, and the opposite is true when times are good. The home you get for the dollar is smaller. With this in mind, I expect to see the median home size for new homes decline as today's higher mortgage interest rates push down home affordability. The final graph in today's report provides a great visual of how homes have appreciated in Tallahassee. It plots the median existing home value each year and reveals the impact that the diminished inventory of homes for sale is having on home values. Note that the scale on the left side of the graph shows increments of 3.5%, the historically normal rate of home value growth prior to the housing bubble. You can see that we'll have 3 years running where the overall appreciation will average triple the historic norm. The market has been undersupplied since the end of 2016, so home values have been soaring at an accelerating rate. The demand for homes remains lower than the peak market years of 2005 and 2006, and probably lower than last year due to rate hikes in the mortgage market. With new construction representing only 10% of the inventory, though, the declining demand will result in declining supply at the same time, as many buyers also have a home to sell. The continuing inventory shortage is only going to increase the pressure on home values. Yes, it's nice to see home values rise, but double-digit appreciation has been eroding home affordability and could very well convert our market to one of haves and have-nots. The relative supply of homes have reached new lows in 2022, and the bidding wars have extended to more price ranges than we had seen in the past. I do not see bidding wars going away this year, but we'll likely see fewer of them at the higher price points. Despite the movement of the market in the first 5 months of 2022, my advice remains unchanged. First of all, ignore housing reports from sources unqualified to deliver them. Secondly, if you're happy where you are and believe it's the right home for you for the next 10 years or so, stay and enjoy your home. You might have missed your window of opportunity for refinancing, but I would still check with a qualified mortgage lender to see if you can lower your payment, as today's rates are still comparatively low, below 1/2 of the 8-year average. But if you think a move is something you'll need within the next few years, you should aggressively pursue it today. I expect home prices to rise and mortgage interest rates to rise too. Not only will homes become more expensive, so too will the money you'll need to borrow to buy the next home. This will price out many traditional move-up buyers in the future. Don't let this happen to you. And if you're concerned about selling your home and then not being able to buy one due to the scarcity of supply, you should check out our Guaranteed Offer program. It allows you to sell your home, but not have to leave it until you close on a replacement home, removing all the stress of being homeless after selling your home. I have included a link below to this popular program. If you want to see a video featuring my 9 tips for buying a home in a highly competitive market, you can view it by clicking on the box on the top left corner of your screen. To see a popular video featuring my top 6 home selling tips, just click on the box below it. Please remember to like this video, check out the links below it, and subscribe to our channel so that you never miss anything.